We're back with another episode of the Ticks and Trades Market Recap. My name is Sam Morton. This channel tracks trades that result from levels in the SPY that I calculate before the market opens each morning. These are levels that, under normal conditions, are poised to provide support and resistance during the open session, and I also offer some analysis about what I see on my charts and where the SPY and the corresponding E-mini futures might be going next. We'll look at the daily levels and review the game plan for each day, and then we can look at how the trades would have worked if you traded them systematically. There is a set of rules that students of the E-mini Trading 101 course are aware of for how to pull E-mini points out of the market on most days. We get around a 75 to 80% win ratio in the long run. Today we're covering Tuesday, May 27, and Wednesday, May 28, 2025. We'll come back to this daily chart of the SPY at the end of the video and talk about where price might be headed next. First up is Tuesday. These were the levels for the day. You can read through the game plan by pausing the video if you need to. We pointed out that how the bounce from the top of that zone from Friday seemed to be what the bulls needed to try to get a rally going. And by Tuesday morning, they were already above the trend line that we had on the chart for a few weeks now. Staying above that trend line was the plan for higher prices. And if we got closes under the trend line, a rally would have probably been off the table. That was the plan going into Tuesday. Here is the rest of the game plan and a screenshot of how the SPY looked before the market opened that day. Everything between the vertical dashed lines is Tuesday's activity. You can see that price opened above the trend line, came down into it early, and then launched from there. And that was the bullish behavior you would have been looking for, expecting price to start to climb if they could stay above that trend line and close candles above it. So being long was the plan based on these early clues. If you were treating this as a process, you would have waited about 15 minutes to see if price was going to maybe stay under the trend line, and then maybe the bears would try to pull price down more from there. But after 9:45 a.m., price was above the trend line and on their way up, and they never came back down to it. So unless you jumped on board at some point for this ride up, there was no official trade here down at the trend line according to the rules. They did hit one other level, 588.10. So going short there, expecting at least a 4-point reaction was the plan. If you applied the 5-cent buffer and went short at 588.05, when the SPY hit 588.05, going short in the E-minis, a pullback was just a little shy of that 4-point base hit here. That's what we're looking for. So the conservative thing to do would have been to jump out at a wash when price came back up to the entry point just a few minutes later. That's just your way of staying out of trouble in case the market is telling you by virtue of this kind of behavior that they're going to go higher. They did eventually, of course. You would not want to be in a short position in a bull market. They did pull back a few minutes later, and that 4-point base hit would have worked out okay, but we can't count this trade according to the rules of the strategy. That level was important for a little while longer. They launched from it later and continued higher. So that was Tuesday. No official trades unless you happen to jump on board and ride some of this move up. By the way, notice where they stalled out. It was around 590.55. I'll go ahead and add the line here because it comes into play the next day. This was the 75% Fibonacci retracement from the most recent high to last Friday's low. I did not include it on the board as a tradable level for Tuesday because going into the morning, I just thought it wouldn't be as important as some other levels higher up. There was a zone higher up that was more important, but they did react there, and it would have been a good place to try to squeeze out a few more points. And the way price hung out around this level the rest of the day and then overnight, in the overnight session, it did make it relevant for today, for Wednesday. So it turned out to be the only level that was hit for Wednesday. It produced 2 trades, but we'll get into that later. There is no footage to watch for Tuesday of my trades because I was not involved in the market all day. Kind of a busy day back at the office, catching up after my extended weekend. So no trades for me on Tuesday. And this is Wednesday's levels and game plan today. My main focus was to see if price could get up to the zone between 593.58 and 594.25. That's a zone right there. If they could do that quickly, I was ready to go short with maybe a larger than usual lot size of contracts. I knew it would be really good overhead resistance for probably more than just a few minutes or so. I had a meeting at 10 a.m. and I was busy getting some things ready leading up to that, so I ran out of time. So you can pause the video if you need to read through the game plan and see what we had going into the day for Wednesday. And I'll let you see all the levels, the zones, the trend lines, everything that we had on the board for Wednesday. And out of all that, only 590.55 came into play per the rules. So here's Wednesday's price action. This is the zone I talked about. I was ready to go short if I could get up there early, but I had that problem of the 10 a.m. meeting, and so I ran out of time. I got into a quick trade that I bailed out on. I mentioned that earlier. It was right in this area here around 592.60, I think it was 592.62, something like that. This ended up being the high of the day, but I was looking at this zone as a longer term destination. So we'll get to the recording of my trades later. Right now, let's just point out what should be obvious, that when they came down to 590.55, this level gave two trades. The first was right here, a bounce on the long side. This is if you're playing by the rules. They got under the level, plenty of time passed. They got back up to it after 1 o'clock, and there's a short trade on the other side. It's what I call a recycle trade. So that would have satisfied this level, those two trades. No more trades after that for Wednesday. I'll let you watch some sloppy trading of my own if you're interested. As I said already, I had that meeting, so knowing that I would be unavailable for about 30 or 40 minutes during the best time of the day to trade, I tried pulling a few points at that 592.60 area. Went short there with, I think, two contracts and thought there would be some resistance. At that time, I still thought they were going to go up to this zone, so I bailed out pretty much at break even, lost a point or so. And that was obviously a mistake because that was the high, and being short would have been the right place, the right thing to do. Then right before the meeting, I thought I'd go long with a couple contracts or four contracts down at 590.55, but I've kind of sort of chickened out, canceled the order because I was worried it might take too long for it to develop. So really for the next hour or so, I was out of pocket. When I got back to my screens, I kind of foolishly jumped into a short trade, and you'll see that happen. I think it was around 11, a quarter after 11 or so, back in front of my screen. So I'm going to scrub ahead here. I went short with four contracts. Just pause this so I get my bearings here. Short with four contracts because I thought the bears were in control. They were going to go farther down, and I thought I would just jump on and ride that down a little bit. But I quickly realized that at that point in time, there was a better chance that a bounce from that area, this was based on like a 10-minute, 15-minute chart, maybe even a 30-minute chart, was telling me there was some support in that whole area. So I reversed this short trade when I was out of the money a few points, lost a couple points in the process there. Gave some dollars back to the market, but I stayed in this long position for about 2 hours. It ultimately paid off. While the bulls were able to get price back up to 590.55, they weren't able to get any higher than that. But I at least washed out that loss from earlier and ended above water. So I'll just scrub ahead here and show you how this long trade paid off. I was even willing to buy some more if they got farther down. But it wasn't a huge move. Got back up to the 590.55 area. Tried to trail one more contract, and you'll watch me get stopped out a point or so into the money after this trade was open for about 2 hours. And that was it. So late in the day for me, I closed up shop, stopped this recording around 2 o'clock. So that was my one trade for today. The first tracking log is the playing by the rules log. No trades for Tuesday and 2 trades for Wednesday if you were playing by the rules. Pretty straightforward if you're sticking to a process. That does tend to take a lot of the guesswork out of trading. You just do the same thing at each level, rinse and repeat. Works pretty well. And then on the Sam's Trades log, looks like this. Nothing for Tuesday and a handful of points for today, Wednesday the 28th. After giving some dollars back to the market, first on that 2 contract short that I bailed out on, then later on that 4 contract short that I reversed, I was able to pull some more points on the long side of that same trade. Net was equivalent of about 5 points on 3 contracts, $756 to the good. Back on this daily chart of the SPY, the first thing I want to point out is that on Tuesday, price did not come down this far below the trend line. I'm not sure why this chart here on TradingView shows it this way. Here was an hourly chart. You can see they opened, they came down and launched from the trend line, and that was support. But they didn't go as low as this daily chart suggests they did. Then on Wednesday, maybe I'll just go back to the hourly chart. On Wednesday, they stalled out. Let's put a line here. The high of this breakdown candle back a week ago or so, that was the high. They tested that high and pulled back more than I thought they would. And that was where it started to go short. And at this point, I wish I'd stayed in that trade. But guess what's happening now? The futures have pushed price back up past that zone that was so important that I was eager to go short at. And the June contract just hit 6,000 too. This is as of around 10:30 p.m. or so Eastern, Wednesday night. We'll go back to the 1-minute chart here on TradeStation because this is where I have my levels. And here is what they're doing. So they've blasted through the zone and they stalled out around 596.24, which is a level we had this morning. So if price is still above this zone by tomorrow morning when they open, it will just reinforce the importance of this zone. Although by tomorrow morning, I may be able to refine this area a little, maybe find a more precise level in this area. But the point is that markets will often gap above important areas like this overnight that would otherwise be too hard to do during the regular session. They do that kind of thing while everyone is asleep. So we just need to adjust our game plan accordingly. So back to the daily chart, let's say that by tomorrow morning, the price is still up here. They open above 596. Here's 596. And why is 596 important? Well, first of all, it would put price above this trend line, the high here to the high they made last week. They're already above it in the pre-market. So if they stay above this and they stay above 596, then that puts the bulls in a good position to go to 600. 600 would be in their sights. 596 happens to be the high of the breakdown candle from March. Might as well look at the monthly chart. This is March. So the high, they're above it now. They're hanging around the high. So that would put the bulls in a good position to stay bullish. So we have 2 more days in the month of May. So far, from where we sit now, the bulls are strong. And they're going to probably try to keep that. I'm not sure what's going to happen. I know there's some data releases coming out tomorrow and Friday. Not sure if they're going to have any effect on price, but like I said, from where we sit, the bulls are strong. So their job is to maintain where they're at overnight tonight. Next couple of days, we'll see if they can open strong tomorrow morning, and we'll just go from there. Speaking of the morning, I'll get new levels on the board for tomorrow and spell out a game plan based on what I'm seeing then. But I will be gone for most of the morning. It's my son's high school graduation ceremony tomorrow morning. So I'll be taking a break from trading to help him celebrate his achievements. That's a wrap for this recap. Thanks for tuning in. If you're interested in learning this strategy to where you can find your own levels of support and resistance to trade against and a set of rules that helps you standardize your trading, then head over to ticksandtrades.com to learn more. Keep piling up the base hits. I'll talk to you in the next recap video. Have a great rest of your day.